Hello everyone, welcome back all to this channel. So in the previous session we understood about the adoption piece, or rather usage of SAP application in various business processes, right? We witnessed how complex business environment and resources can be managed well via SAP. We also looked into the typical manufacturing processes and its linkage to the SAP modules like procurement, production, storage, and warehousing, sales and distribution, right? Which eventually we linked all these business processes to the material management, that is procurement to material management, production to production planning, storage and warehousing to extended warehouse management, and likewise sales and distribution to the sales and distribution module. So today we'll be discussing more about one of such SAP module or topic, which is nothing but SAP material management. And we use SAP material management for all procurement and logistic business processes in SAP. Now coming to the material management process, broadly in any organization, procurement will be done for two major reasons, right? One is for self-consumption and other one is to resell it, which we can call it as GFR and GNFR. GFR is nothing but goods for sale and GNFR is nothing but goods not for reselling, right? So with this context, let's start understanding the business processes while procuring material for own usage or reselling it. So the very first business process in material management is purchase requisition. So what does purchase requisition means? Purchase requisition is a document that contains the list of requirements, right? Generally in any organization, the organization or business would need the list of materials either to produce something or consume something, right? So that list of materials is nothing but the purchase requisition. A purchase requisition is a request that is made to the purchasing organization to procure certain list of materials or services. It is an internal document and remains within the organization. Purchase requisition needs approval from the purchasing organization. If purchase requisition has already been approved, then it can be modified only to a limited extent. Now coming back to purchasing organization, because we oftenly heard about the purchasing organization, right? So purchasing organization is nothing but group of dedicated people who intend to make centralized purchases due to the strict control process and better bargaining capacity, right? So purchase requisition can be created for the various procurement types, right? We have 5 different types of procurement, which can be essentially classified as standard procurement, subcontracting procurement, consignment, stock transfers, and external services, right? So what does this procurement types will explain us? Standard procurement type is nothing but getting the finished material from the vendor, right? Now subcontracting procurement type is nothing but providing the raw material to the vendor and getting the finished material back from the vendor. Consignment procurement is nothing but procuring material that is kept in the company premises and paying to the vendor upon usage of that material from the premises, right? And stock transfer is nothing but getting the material transferred within the organization from one org unit or one plant to another plant. Then external services, it's nothing but getting services like maintenance from the third party vendors. Now a purchase requisition can be raised across all different types of procurement, and some of the key information what we are supposed to give while raising a purchase requisition are: it is purchase requisition group, purchasing org, we would also need to give quantity, delivery date, material group, plant, etc. So here we are trying to understand the business process in general. We will deep dive into each module and business processes in the upcoming session. Now moving to the next business process, which is nothing but requisition for quotation. Now requisition for quotation is one of the important business process. The reason being it is because vendor selection is a most important process in any of the procurement cycle, right? Once requirement are gathered, we start looking for a possible supplier who can fulfill the requirement at a best possible price and the best quality, right? So a request is made to the vendor to submit their quotation indicating the price of material along with their terms and conditions. And request for quotation is a formal invitation that is being sent to the vendor basically to submit the quotation indicating their price and terms and conditions, right? It contains all the details with respect to the goods or services, quantity, date of delivery, and the date of bid on which it has to be submitted. Now, RFQ or requisition for quotation can be essentially created in two ways. One is manually and other one is automatically, right? Automatically means with reference to the purchase requisition. And we can create each of these documents with the help of the predecessor document, right? Which simply means I can create my requisition for quotation based on my purchase requisition. Likewise, I can create my quotation based on requisition for quotation, PIR with respect to quotation. Similarly, purchase order can be created based on my previous reference documents, right? Same goes with the rest of it, right? So all these documents will be detailed out and documented in SAP at each layer, and each layer will be created based on the reference to the predecessor or the previous layer, right? Now that was all about the requisition for quotation. Now coming back to the third important business process, which is called as quotation. So quotation is nothing but post vendor selection. Procurement team will update the system or application with the respective vendors whom we have shortlisted, and quotation is created based on the requisition for quotation, right? So quotation is nothing but a reply by a vendor in response to the requisition for quotation, and some of the key inputs we are supposed to give while creating a quotation are RFQ material, RFQ quantity, delivery date, net price, material group, plan, storage location, etc. Now coming to the next step or the next business process, which is called as purchase info record. Purchase info record is nothing but the combination of material and vendors, which is maintained at database level or documentation level. Generally in any of the company or the organization, material and the vendor details or data records are kept independently or separately, but purchase info record will help to combine both this data and give us a unified output with respect to the material and the vendor master, right? Now purchase info record stores information on material and vendor. Say for an example, a vendor current price of a particular material is stored in the purchase info record, right? Purchase info record can be maintained at plant level or purchasing org level. I will discuss in detail about it when we go ahead in the sessions, that is when we discuss about the micro level analysis or enterprise structure for material management, right? So essentially purchase info records can be created for different procurement type, which we spoke about it earlier. Procurement types like standard procurement type, subcontracting type, consignment type, right? So purchase info record will be created in accordance to each of those procurement types, right? Now after this, moving to the next business process, which is called as source list, right? So PIR or purchase info record speaks more about the material and the vendor details, right? Whereas source list helps the organization to order a particular material from different vendors in a different time interval, which simply means source list is nothing but the list of possible source of supplies for a material over a given period of time or a time frame, right? Which simply means the list of vendors who can source us the same material at any given time interval, which is maintained in the list, is called as the source list. Now source list can be essentially created based on the purchase info record. That is, we can create a source list based on the purchase info record, and source list can be copied from one plant to another plant. Again, I will be discussing in detail about all this plant, purchase or purchasing group in the enterprise structure as we deep dive further ahead, right? Now this was all about the source list. Now coming back to the purchase order. Purchase order is one of the most important document in SAP. SAP ERP was introduced so that procurement can be done most effectively and efficiently in terms of time and cost. Procurement can be done for various types of goods and services. Procurement will start by creating a valid purchase order. Purchase order is again nothing but the formal document given to the vendor, which includes list of goods or materials which are supposed to be procured by us or like by the organization, and accordingly purchase orders can be created for different types of procurement, right, which we spoke earlier. So purchase orders can be created according to those procurement types, and each of those procurement types would be differentiated based on the item category. So there are four types of procurement types essentially, which is linked to the purchase order. It is subcontracting purchase order, it can be consignment purchase order, it can be stock transfer purchase order, or it can be a service purchase order, right? So each of this purchase order is differentiated based on the item category. Subcontracting purchase order is categorized as L category, consignment purchase order is categorized as K, stock transfer purchase order is categorized as U, and likewise service purchase order is categorized as D. Now each of these purchase orders are standard in nature, which is being provided by SAP. So essentially this is a most important document in SAP for us to start with the procurement process, right? Now after purchase order, let's move to the next important business process in material management, that is goods receipt. So the goods receipt can be essentially viewed in three different views. One is production planning goods receipt, the second one is warehouse management goods receipt, and the third one is procure to pay goods receipt, right, that is material management goods receipt. So just to give a quick glimpse about the production planning and warehouse management goods receipt. So production planning goods receipt is nothing but goods receipt performed when material is produced as per the production order, that which is nothing but when you lay a machinery in your organization to produce something, you create a production order, and based on that production order you try to procure some raw material to convert that raw material into semi-finished and finished goods, right? So that receipt of goods is nothing but the production planning goods receipt. The second one would be warehouse management goods receipt or extended warehouse management goods receipt. It is nothing but the physical inbound movement of goods within the warehouse, which could be essentially being received from the plant or machinery which you have built within the organization, or it could be an external procurement from the vendor, right? So that was about inbound movement of goods within the warehouse. So the third one we are about to discuss is with respect to the procure to pay goods receipt, which is nothing but we can post goods receipt with respect to the purchase orders, right, which is linked to the material management. Now we define purchase order as with reference to the goods receipt, and we compare the delivered goods receipt with the purchase order. The goods receipt with respect to the material management is nothing but you create or receive the goods with reference to the purchase order, right? Now this was all about the goods receipt. Now going to the next important step, that is nothing but the invoice receipt. So what is invoice receipt? Invoice receipt is nothing but the legally bound document sent by the vendor to pay against the goods dispatched with reference to the purchase order which is sent by the company, right? So initially we would have created a purchase order and sent to the vendor with a list of material or services which we are supposed to be procured, and based on that purchase order, vendor would fulfill us all the goods and services, and we would receive the goods. And once the goods is received into your premises, you would cross verify, make a quality inspection, and then create a goods receipt note, right? So once the goods receipt note is created and you send the same to the vendor would dispatch us the invoice receipt. Based on that invoice receipt, you make a payment, right? So with that payment being the last leg of material management, finally payment is made with respect to all the vendors against the invoice receipt, right? So again, payments are made or done in two ways. One is manually and automatically. So that was all about payments in SAP, right? So in SAP we have one important concept which is called as three-way matching concept, which simply means the value of the purchase order, goods receipt and the invoice receipt should be equal in order for me to create an automatic payment program, right? In order to make the payment automatically to the vendor, my three-way matching concept, that is purchase order, goods receipt and invoice receipt, should be same, which simply means if I raised a purchase order valued or worth of $100, I have to receive the goods with the same order value, and likewise my invoice will also be received to the $100 worth, and then if once all these three documents have been matched in terms of the value, my automatic payment could be triggered so that an hassle free and automatic payment can be made to the vendor, which can eventually help us benefiting in the long run for maintaining a good credibility and a good bargaining power, right? So that is all about the three-way matching concept, where my purchase order, goods receipt and invoice receipt value being the same. But not always the scenario would be same, right? In certain cases we would not receive the goods or value of the goods same as the PO due to various reasons like lost in transit, damaged while transiting, or theft, etc. Right? In those cases, our PO value will not match with the GR value, that is goods receipt value. Hence, in those cases, my invoice receipt will be sent based on the goods receipt note which we discussed earlier, and PO will be amended or altered accordingly to process for the automatic payment. But if the invoice receipt is already received with the goods receipt, which simply means my invoice receipt is already posted and then we got to know about the damaged goods, then subsequently credit note will be created or raised to reduce the invoice value and then make a payment to the vendor accordingly and automatically, right? So this was all about the three-way matching concept, which is one of the most important concept in SAP material management and the finance process, right? Especially while making an automated payments. So in short, let's try to quickly recap all these business processes in crisp. So what does purchase requisition means? Purchase requisition is nothing but the list of both goods and services. Requisition for quotation is nothing but finding the right vendor. Quotation is nothing but finalizing the vendor. Purchase info record is nothing but the document used for updating both vendor and material documents or data. Source list is nothing but the list which contains the vendors supplying the similar articles. And purchase order or service order is nothing but the formal document sent to the vendor for fulfilling the list of goods and services. Goods receipt is nothing but receiving the goods. Invoice receipt is nothing but receiving the invoice. And finally, payment is nothing but making a payment against my invoice receipt, right? So having said this, let's quickly check on the accounting impact as well, right? Because we have an integration between material management and the finance, like we spoke or which we saw in the previous session. Material management, procurement is tied up to the material management, and material management is tied to the account payable process, right? And accounts payable is nothing but the finance process. So let's quickly check the integration point between my material management and the finance area. So all these business processes are essentially which is part of material management, but eventually my accounting impact will be triggered only from the goods receipt, right? Which simply means my accounting or accounting document will be posted only after I receive the goods which is being dispatched from the vendor. So my accounting impact will start only after the goods receipt, invoice receipt, and finally when the payment is made, right? So until purchase order, there won't be any impact on the accounting entries or financial books, but only after my goods receipt my accounting entries would flow in, right? So let's quickly see the accounting impact or the accounting entries once we receive the goods onto our premises, right? So coming to the accounting entries, we have goods receipt, invoice receipt, payment, and bank reconciliation statement, right? So with goods receipt, we have inventory account being debited and GRIR account being credited. What is GRIR account? GRIR account is nothing but the goods receipt or the invoice receipt account, right? It is nothing but the intermediary or a clearing account which we specifically use in the SAP application. Now with respect to the invoice receipt, it is nothing but GRIR account being debited and vendor account being credited. If you notice, my GRIR account credit entry will be knocked off or negated with the GRIR debit entry. So right now my entries which are open would be inventory account debit and the vendor account credit are the two entries which are open until invoice receipt, right? So once I make a payment to my vendor account would be debited and bank checkout account would be credited. And if you notice here, I would be knocking off my debit balance of vendor and the credit balance of vendor here. So my currently open accounts would be inventory account debit and the bank checkout account would be credit. These two entries would be open. Once my BRS entry or bank reconciliation entry kicks in, then my bank checkout account would be debited and my main bank account would be credited. And if you again notice here, my bank checkout account credit amount or the value will be knocked off with the bank checkout account debit value. So ultimately the only entries which would be remaining at the end of the procure to pay accounting process is nothing but inventory account being debited and main bank account being credited. Inventory debit, which simply means my stock, my inventory goes up, that is why it is shows a debit balance, and since I'm paying to the vendor, my bank account will be credited. My balance gets reduced, so my bank account gets credited. So this would be my final entry, inventory or the stock account being debited and the bank account being credited. So this was all about the accounting entries, right? So coming to the next view, it is sales and distribution view. I'll be taking in detail about this in the upcoming or the next session. So that's it for today. I hope you all enjoyed today's session. Looking forward for more participation, feedback and comments. Stay tuned with us and please don't forget to subscribe, like and share. Thank you. Thank you all.